Let's look at a megatrend with huge gains. Okay, first off, read this disclaimer carefully. In this video, we will look at the megatrend that I call alternative energy. I do draw a distinction between eco-friendly energy and alternative energy because some of the alternative energies are not necessarily holistically good for the environment. But let's go here, okay, so here is alternative energy. There are 10 stocks in this portfolio, this theme. You can see here that the average gain from the 52-week low is massively outperforming the S&P 500 and the Nasdaq. Huge gains, not that far away on average from 52-week highs either. So we got some nuclear here, we got some hydrogen fuel, biofuel, mixed, and also wind energy. Okay, so this is a very powerful theme. We can see here that Pacific Ethanol is the one with the biggest gain, 3,536% gain from 52-week lows. But all of them have big gains. In this video, we will specifically look at Plug Power. They are in the hydrogen fuel business. So let's first look a bit at their website, Plug Power. Building the clean hydrogen economy. Plug Power is the leading provider of clean hydrogen and zero-emission fuel cell solutions that are both cost-effective and reliable. New markets for zero-emission fuel cell products. Our leading fuel cell products are designed to address your biggest productivity and uptime challenges, all while providing sustainable solutions for your business operations. So they have 35,000 fuel cell units deployed and more than 20 years of innovation. Plug Power is the largest buyer of liquid hydrogen and has built more hydrogen fuel refueling stations than anyone else in the world. So clearly they have a very leading, they have a key role in this entire alternative energy revolution. So let's first look at the seasonality of the stock. So we are currently in September. You can see here that this is the percentage of months in which Plug closed higher than it opened. It's a bit 50-50 for sure. Even October, which is a bit stronger, it only closes higher 47% of the time. So yeah, there are some issues when it comes to that, but we will look at the charts soon, and then you will get the bigger picture. So here is vis-a-vis the S&P 500. There seems to be somewhat outperformance in September-October. That's interesting, quite relevant for us now. Okay, so here's the chart for Plug Power. It's on the Nasdaq. PLUG is the ticker. These are weekly data points, and we have all the history here of Plug Power. So within this entire time frame, the stock is down minus 92%. That's obviously rather, it's been tough times. But this is something you need to just be aware of when it comes to these highly disruptive and future-oriented businesses, is that it can be difficult in those early years. But if we zoom in a bit, we get a different picture. So here you can see that there is a bit of a rounding formation, and you could certainly make a case that this is a rounding. It's a bit of a messy rounding bottom, but it is a rounding bottom. And there's been some very significant gains. If we measure from this low way back here to the recent high, we approach, that's like 9,500%, which obviously is a huge gain, and that is even taking into account tremendous volatility. So if as an example you were actively managing, and let's say that you got out around here, and then you waited until things cooled down a bit, then the total gain you had could be quite significantly bigger. So there's benefits to managing your positions. If you look here long term at the RSI, we see that the stock, it can be oversold for longer periods and also overbought for longer periods. But it seems like recently there's been a bit of a shift in which RSI has been somewhat more reliable as a trading signal. It seems like the stock has become a bit more reactive, especially to oversold levels. That's where we see buyers stepping in. But if you look here at the most recent developments, it can be overbought for multiple weeks. It's nice to see here that the accumulation distribution line is corroborating this rally, so there is some very real volume stepping in. That's good. If you look here at the moving averages, these are very long-term moving averages because we're looking at weekly data points, and even the red 200-week moving average has now turned positive. So there's a very big shift here, very beneficial for the bulls. Breakout above all kinds of resistance levels. But still, we are very far away from the highs. And there's a 69% positive correlation with the S&P 500. If you go here to daily data points, let's load the moving averages. Yeah, a very nice configuration. Here you can see that the 200-day moving average in red has been very relevant in the past. Resistance, 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 then we break out and test. Support, support, support. It was a very good buy level. Hence, if we do get a pullback, we know historically that the 200-day moving average has been reliable. I mean, you can also see here in blue that the 100-day moving average and also actually the 50-day moving average has been somewhat reliable buy levels to enter positions when you have a bounce. So that's good. That's good as far as entry. Okay, so what would I do now? Okay, the bit of a challenge we have at this very moment is that we have had, looking at the long-term picture here, we can see that this stock can move in some pretty big cycles and correct quite significantly. This correction here, as an example, was minus 70%. That's substantial. If you look at this sell-off right here, this was minus 54%. This sell-off from this high down to this low was minus 32%. Hence, when there is a correction with plug power, it can be very meaningful. So you do want to definitively have some stops in place here. But given that we have seen this massive surge, I wouldn't be shocked to see another correction on the horizon. They seem to come with some relative frequency. And we are seeing some exhaustion now in the charts here. In the latest candlesticks, there seems to be some turbulence in this region. The bulls are trying to get up there again, but it seems to be some rejection. Hence, given the history of this stock, the probabilities are favoring a pullback, which could be a fantastic entry opportunity if we do find support. Okay, so you can see here the gains have been pretty spectacular. Year to date, 309%. If we go here to the analyst price target, so the average analyst price target is $13.34. That is only 3% above the current level. Hence, the analyst would say that a lot of the good news are priced in at this point. If we go to Saks.com, they have a number 3 hold, F value score, degrowth, and D momentum. There's no dividend. Market cap $5 billion US. Okay. So, to sum up my take here on this theme. Long term, I'm very bullish. Well, I am bullish on alternative energy. I am very bullish on eco-friendly energy. But alternative energy, there are some issues with it. In that they are not necessarily holistically good for the environment. It's a bit of a tricky thing. But this company, it looks very interesting. It certainly is one of those that we do expect a pullback, and if we do get some bounce on the key, support levels that we did identify, then it could be a good entry opportunity. Whatever you do, of course, don't fight the trend, and may the trend be with you.